Hello everyone, my name is Sonu Thakur and it's my great pleasure to welcome you all in my online session on Keeping Finance Record organized by Smart City and Spark Incubation Center, Sagar. So today we have as a mentor Shruti Jain ma'am. She is working as a CA last 10 years. So we are welcoming you, ma'am, on the behalf of Smart City Limited and Spark Incubation Center. Over to you, ma'am.
Okay. Hello everyone. Can I see how many people are there? Is it possible for me to see how many people are attending the session?
Uh,
No, ma'am. You won't be able to see as of now.
Okay, I have to just speak and there is no it is not going to be a live
No, this will
interaction,
be a
right?
live session. If the viewer have any question, they'll just comment it on the comment box.
Okay. Um, Good afternoon everyone. Today is 12th of March 2024. I'm starting with the uh, basic requirement of any financial institution, that is keeping financial records, best practices for accuracy and organization. Financial records, first for that we should understand the meaning of finance and financial things means all kind of activities involved in your business that includes finance, like sale, purchase, expenses, income, expenses, liability, and assets. You might be earning income from different sources. You might be expending to different sources. So, keeping a record for all these sources is our primary requirement. It should be accurate. Accurate means how much you have recorded the expense or income. It should be accurate. It should be correct. Let me introduce you to financial records. I will just read it out and tell you what are the requirements after that. It says maintaining accurate financial record is crucial for the success and compliance of any business. If you know the meaning of crucial, crucial means important. For success and compliance of any business. Success, why you say success? Because if you don't have records, you will not be able to the track and forecast the future needs of your business. So, for any business, whether you are running in a profit or loss, you should know where you are standing. Suppose you are maintaining only the sales amount. You're not maintaining your expenses or purchases. Then, in that case, you will not be able to know your profit or loss. Therefore, accurate financial records is crucial. Accuracy means correctness. Along with correctness, it should also be under a correct head. Like if you are having any expense that is directly related to your manufacturing or trading, then it should be direct expenses. But those expenses which are not directly related to your manufacturing or trading, it should be classified under indirect expenses in your P&L account. And compliance of any business. Compliance, what is the meaning of compliance? Compliance means complying to the adhering to the adhering or complying to the norms set by the government for every business unit. For that, it has set up some slabs. Like in income tax, you can see the slab till 3 lakh, it is exempt. So if you not know that your profit is 3 lakh, how will you comply to income tax? Similarly, there is compliance under GST. Like if you are a service sector unit, till 20 lakh rupees, आवाज मत कर. Till 20 lakh rupees, you don't have to register under GST Act. Then if you are trading in goods and services, then the limit is 40 lakh. How will you be able to know whether you have to you have to register for GST or not? By the compliance, by accurate financial records. Like, if you think कि bank transactions have exceeded some limit, and for that reason you have to comply with the business requirements. Next, in this presentation, we delve into the best practices that ensure precision and organization in financial documentation. Second thing which we are going to understand is documentation. There are two acts that basically governs an organization is Income Tax Act, GST Act, and there is one more act of company law if a company is registered as a private limited company, OPC, or public limited company. In all those areas, you have to have documentation. It says on an average, 6 years documentation is required. Like if you are making a sale, you have to make an invoice, okay, where you have to mention goods and services provided by you plus GST. If there is any discount, any TDS, TCS, all has to be mentioned in your invoices. It should be a tax invoice. And if you make any expenses, that should also be kept as for future references. Next, we come to keeping accurate and update records is vital to the success of the business. It should be accurate as well as up to date record. It is not like you are keeping accurate record of very past period. It should be up to date because now everything is going on live. So your record should be up to date to take better decision making. Good up. What are the things that help you? Why are we saying to keep your records so updated and accurate? Because good records help you to minimize losses. देखिए, if you understand the basic things, if you are on record, you you can't memorize every activities of your business, and it is also not suggestible. So if you maintain records, you can minimize the losses. How can you minimize the losses? There are many ways you can minimize the losses. First, if you have maintained the record, you can see how the expenses, in which areas you are incurring expenses. If you are incurring expenses which is not worthy, then in those cases, like some expenses you incur which should have been minimized or which should have been avoidable, and still you are incurring those expenses, in such cases, y- by knowing the records, you can have a track of these records. By accurate and update records, you can minimize the losses. Manage cash. Second thing is manage cash. How we will manage cash? There is there is many activities going on in an organization. It is not like that ki today you are doing sales, tomorrow you will do purchases, then after you will do income, and then you will expense. No, on the very same day you have to do sale, you have to do purchases, you have to make payments to your vendors, you have to collection from your debtors. All these activities occur at the very same day. So you should be knowing how much cash is available with you right now. For that reason also, recording is very important, and accurate recording is definitely the most priority thing that needs to be done. Meet any legal, regulatory, and taxation authority. Meet any legal thing, something related to government, legal, regulatory, regulation also as levied by the government, and taxation authority also those levied by the government. All the three things as levied by the government, as I said, like if GST, your sales is more than 20, if your sales is more than 40 lakhs, in that case you have to apply for the GST registration. How we will get to know the sales is exceeding 40 lakhs? By keeping books of accounts, appropriate books of accounts accurately and up to date. So all the three things, that is legal, regularity, and taxation, needs to be met. And improves financial analytics. What are financial analytics? Financial analytics means tracking the after recording. You have to track the trend in which everything is going, like sales. Suppose your sales was only 20 lakh rupees in the month of April. Then in the month of May and June, the sales went to 50 lakh rupees each month. So you can see that in April it was only 20 lakh, whereas in May and June the sales went up to 50 lakhs and 50 lakhs. So it shows that your business is either seasonal and there is some kind of requirement of your product or services during that period. So it improves the financial analytics. Analytics means analyzing what is the difference between past, present, and how can we correct those things in the future. What are our objectives? Why are we coming here in the incubation centers? We are primarily from a non-commerce background. Generally, we are from non-commerce background. We are more focusing on how to make a product available to the customer. That is our main intention. Our intention is not to keep records or not to keep comply with the government policy. Our main intention is to make a product or services available to the our customers or clients, or all the individuals whom you are serving. So for that thing, government says focus on your business, but keep a financial and accurate records that will help you, to enhance your business activities and take proper decision making. So our objectives are understand the importance of accurate financial record. Why are we saying to keep an accurate financial record? Because it will not directly but indirectly it will help you to take better financial decisions. What are better financial decisions? Better financial decisions includes, like, if you want to make a payment, whether you should make a payment to the vendor right now or not. If you have to make payment to the expenses, like it's the month of April. So in April there is electricity expenses, you have to incur expenses on AC, cooler, and everything, because it is a summer season. So all these decision making needs to be done right presently, whether you should invest in any kind of plant and machinery, whether you should give loans, whether you should force your debtors to pay back your money. All these things has to be kept into mind, and these can only be achieved when you have proper and accurate records. Learn best practices of the organization. Best practices of the organization, I will say, is in the terms of accounting and financial analysis. Best practices is to keep the record, and then on day to day basis just estimate where are your expenses going on, where is your sales going on, how much percentage is the cost of purchase to your sales, and all these things can be the best practices of the organization. Next, importance of financial records. Let me read it out, and I will explain it further. Financial records plays a pivotal role in meeting legal requirements, aiding in strategic business decision making, and ensuring compliance with tax regulation. A well organized system is the backbone of a successful enterprise. As we have discussed, there are three things that needs to be kept into mind, that why we want financial records to be kept. First, legal requirements. As we know that the cost of complying with the legal requirements is less than the cost of non-compliance with the legal requirements. Suppose What happened recently in last year, the government told you to get your Aadhaar linked with your PAN. So it was free of cost. But those who have not complied with that has to pay 1000 rupees for getting their PAN linked with their Aadhaar. Means Aadhaar should be linked with their PAN. So a well organized system is the backbone of financial enterprise. Why we say a well organized system is the backbone? Because you will be able to take proper decision at proper time. So the financial record should not be only accurate, it should also be up to date. Legal compliance. Financial records are essential for complying with legal and regulatory requirements. As we know, there is one term called advance tax. In advance tax, the government has given one slab. Like if your tax amount exceed the required limit, if your income exceed that required limit, you have to pay taxes in advance. So when you will understand that you have to pay advance tax only after maintaining the records, and after maintaining the records you find that you have earned so much of profit. Now it's the time to pay taxes to the government on the basis of your records. You get to know whether the accounts are needs to be audited. What is accounts auditing? Audit means government has prescribed some limits for audit of the accounts. It is 1 cr, 2 cr and 10 cr. It has different rules attached with that. For the financial year 23-24, it has some criteria defined for which you need to get your accounts audited. So in that case, how will we get to know that the accounts have is audited or not, needs auditing or not? It is just by complying with the basic requirement of financial records. Yes, recording all your transactions on day-to-day basis, it should be your priority. So legal compliances and taking better decision making for and for compliance to the tax laws and regulatory compliances. For all these things you need your records to be accurate and updated. Then it comes business decision making. Accurate financial records serve as a foundation for informed decision making. Business owners and management rely on these records to assess the financial health of the company. Like as I told you, like in the month of April you made a sales of rupees 20 lakh, and after that you made a sales of rupees 50 lakhs in the month of May. So you understand the trend that in the May and June your company is financially healthy. You should take orders, best of orders in the month of May and June, and accordingly see the trends from rest of the months also. And accordingly you have to make strategic decisions for the growth and profitability of the business. Like suppose in the month of next quarter, that is July, August, September, you didn't had much sale. It was near about 9 to 10 lakh every month. So this shows that your business is making profit in the month of May and June, and in rest, in half yearly um, in a half yearly slab, you can understand that in April your sales was 30 lakh, in May it was 50 lakh, in June it was 50 lakh, and in July, August, September it was near about 10 lakh rupees each. So you have to make it planning, like when there is more sale you should have your products or services ready to serve to your customers. So these decisions have to be taken priority basis, because for that reason uh, you have to acquire your raw materials. You have to you have to do processing. You have to create stock. For all these things you need some time. So if you start, if you don't maintain a business financial records, and in the last moment you get to know that May and June is going to be a very good month, but you will fail. Why you will fail? Because in the month of May, if you start processing your goods, if you start procuring your raw materials, then processing your goods, then making into final product, you will be lag behind. You will not be able to beat the competition. And today market is very competitive, as you all know. In every field there is competition. Mm, but still the avenues and the revenues both are growing. So for that you should have to take a strategic business decision. You should have financial analysis. You should comply with tax regulations and take proper decision making, looking into your financials. Hope I'm not going very fast. Importance of financial records. There are other some aspects which we should discuss. Tax preparation, as we I told you that there is a slab of 3 lakhs, 6 lakhs, 9 lakhs and 12 lakhs in the current year. And in that you have to prepare your tax, you have to pay advance taxes, you have to deduct TDS. So all these things can be done by proper financial records. I will read out one line. Well maintained financial records streamline the process of tax preparation. Organized documentation of incomes, expenses, and deductions simplifies the filing of tax returns, reduces the risk of errors, and minimizes the likelihood of facing penalties from tax authorities. As I told you, complying is more cheaper than non-compliance. If you don't comply with tax authorities or any kind of compliances of tax regulations, your expense will be more. As I discussed, like pan linking of pan with the Aadhaar. Next thing is investors' confidence. Investors and lenders often scrutinize a company's financial records before making investment decisions. Now, I suppose everybody thinks for a better and a prospect thing. You are also doing your business for a prospect, for making profitability, and you will be interested to have investors in your business, investors interested in your business. For that, investor will not is not a fool. He will first analyze, scrutinize what is your financial records. So for investors also, they need a record. If you are might be knowing, every company, every after every completion of the financial year, issues the annual report. Annual report is nothing but a record, a, a presentation of what all things has been done in the past, which builds confidence among the investors. So accurate and transparent financial information builds confidence, demonstrating the company's financial stability and providing a basis for potential investments or loans. So I suppose investors' confidence is much required, because we are in the initial stage. If we are in the initial stage, we want investors to invest in our business, right? So for that reason also, recording is very important. If you have not recorded all your transactions, how will an investor take a decision? Then financial planning, which I have already discussed. Like, suppose financial planning and financial analysis. Like, suppose you have completed 5 years of your business. Now you want to expand your business. For expanding of your business, you want some investment in plant and machinery, you want to take some loan, you want to take some CC limit or OD limit. In all these financial planning, it is not like today you are needing the funds, or today you want to take some decisions, you will today do everything. No, you do forecast, you do budgeting. Budgeting means you, as in household, you budget according to your according to the needs of the family. You budget that this much amount should be allocated to such expenses, and this much amount should be saved, and the balance amount should be invested. In the similar way, in businesses also, budgeting is required. You should know in the upcoming year what you are planning, what you are forecasting, and according to your plans, you are taking financial decisions. All these things depend on your accurate data, enabling business to allocate resources efficiently and work towards long term success. Your ultimate goal is long term success. Nobody wants that your profit should be for short term or for a year or two. Everybody wants that the profit should be growing, because this is the basis of our sustenance. And we work because it helps us for our sustaining and survival of our lives. So recording seems to be a very small process, but it has a huge impact on various things like tax preparation, investors' confidence, and financial planning. Performance in evaluation. Next comes performance evaluation. After after knowing the records, how you will evaluate your performance. Like suppose your net profit ratio. What is net profit ratio? Net profit ratio is net profit divided by sales. So net profit ratio last year was, suppose, 7% or 6%, and this year it came down to 5%. How you got this thing? After recording proper sales, after recording proper purchases, after recording proper expenses, after recording proper discount received, discount paid, everything. After doing all these situation criteria, you came out with the net profit. And when you divided the net profit with the sales, you get to know the performance of the company. And with time, with the records you have in your organizations, you can see, like, last year I have attained 7%, now this year I'm attaining 5%. This helps you for performance evaluation, how your company's performance, where the expenses are going up or where the sales is going down. All these things helps you to take proper decision making and for performance evaluation. But what was the basis? The basis was your records. Without your records, you cannot take financial decisions. So, regular analysis of financial records allows business to evaluate their performance over time. Key performance indicators. There is one term called KPI, which is key performance indicators. These are what? These are ratios and sales, turnover, your GP, your NP, your profit ratio, your net profit ratio, your APIT, your all these things, your profit after tax, profit before tax, uh, earnings before interest and taxes. All these are the key indicators which help you understand. There is one debt equity ratio, there is one debt service ratio, coverage ratio. So all these things are some of the ratios this which has been developed to know your profitability, your liquidity, and financial efficiency. All these ratios, how will come to this conclusion? How will you come to the conclusion? You will only be able to come to the conclusion of your business activities after having analysis of your ratios. But these ratios is available only and only if you have records, and only with the help of your records. Your timely and updated records is what we can say for this session. Your timely and updated records is a key to success. Next, it comes operational efficiency. As I told you, key operations. What are operations? Operations is your day to day sales, purchase, payment to the vendors, collection from the debtors, making expenses, making incurring, clearing your liabilities, taking more liabilities, purchasing some assets or disposing of your assets, or investing in FDs. These all are your operational efficiency. So for the operational efficiency, you should know your cash flow, you should know your finance. Unless and until you know how much cash you're having, how much income you're having, you cannot sustain in any business. So, operational efficiency, I will read it out. Effective financial record keeping promotes official efficiency, operational efficiency. It enables business to track and manage cash flow. First thing you should know, it helps you to track and manage the cash flow. What is cash flow? How much cash you are incurring, inflows, and how much cash is going out of your business, that is called cash outflows. So you have to manage. It might happen that your cash inflow is less than your cash outflows, means your expenses are more than your income. So how will you get to know? How will you take decision? How will you take operational decisions effectively? With the help of keeping the financial records, monitor expenses, and identify areas for cost saving measures. Like, suppose you understand that the cash flow is more, cash outflow is more, means your expenses are more, you have to pay more to your vendors, you have to pay more to your more of your expenses. Then you will understand that the necessity to reduce the cost incurred. Like, I will tell you one example. Like, a company is keeping paying to a transporter, suppose 1 lakh rupees every month. So in a year it pays 12 lakh rupees to the transporter. So if you analyze, yeah, you are paying 12 lakhs to the transporter. It's better if you purchase a truck and keep a driver and include diesel or petrol expenses. Your expenses will reduce from 12 lakh to 7 lakhs. So you are saving 5 lakh rupees. So how you got to know this? You got to know this only after keeping proper records and managing the cash flow. Cash flow, as I said, is cash inflow and cash outflow. So you have to manage कि आज today how much inflow I am having, how much outflow I am having. In that basis you will take decision. Like, if your inflows are not up to date, you are a manufacturing unit, you are having some tight situation related to inflows, you can ask your vendors to wait for few more days, and you can arrange the cash and then make payment to your vendors, contributing to overall efficiency and sustainability. In this whole era, in this whole scenario, you will be able to be efficient and sustainable. Now comes one more term, that is called credit worthiness. Financial records plays a crucial role in determining a company's credit worthiness. Banks and financial institutions use this information to assess the risk associated with the lending money and extending credit to the business. Like investors, you also have banks which provide you with loan. This loan is not given just on the word of mouth. It is given on the basis of the records that you maintain. If your company is a profitable unit and it is continuing to be a profitable unit from last 5 years, the bankers will also have a trust that your credit worthiness is good. So they will extend their loan criteria, they will process your loan. So credit worthiness is also important, and it is made available to you. It is credit worthiness is essential, and it is, what the word is, that it is it can be measured by your records. It can be measured by your records itself. Like if you are making profit or loss, how much is your sales, how much is the amount of your creditors, how much is your debtors, what is your financial position. All these things affect your credit worthiness, your CIBIL, what is your CIBIL score. So all these things is done with the help of accurate and up to date maintaining financial records. Audit and accountability. I told you, you have, every financial institution needs to get its accounts audited if it if it's exceeds some financial criterias. If turnover exceeds 1 cr, 1 crore, then you need to get your accounts audited. So auditing and accountability. Audit you understood, but what is accountability? Accountability comes with responsibility. Like there are 15 employees in your office. Out of 15 employees, 10 employees are of your sales and 5 are your internal employees. So out of that 10 employees, which employees did the best sale or which employees did did not perform very well? In all these things, accountability arises. You will be able to know कि this person is good, this person is making good sales, and the other is not performing so well. So you can give them responsibility, you can account for that, and according to that you can provide them incentives or can reduce the salary. So accountability is also one criteria which is helped with the help of your financial records, which if it's kept accurate and up to date. And as told you, if you keep your records today, in future next 10 years, like you are keeping your records from last 10 years. So for the 11th year you have a record of 10 years. So it has helped you in historical references, like in history what happened, what was the changes which happened in last 10 years, and in that basis you can take decision making. Financial records serve as a historical reference documenting the financial journey of the business. It The historical perspective is valued for trend analysis, benchmarking, and learning from past success and challenges. अब एक चीज तो we understood what is trend analysis. Trend analysis is like up sales was 20 lakhs, 30 lakhs in the month of April. Then it grew to 50 lakhs in the month of May. In June also it was 50 lakhs. Then it dropped down to 10 lakhs in the month of July, August, September. So this is trend analysis. How much is your sales going on? Then benchmarking is keeping a standard. Like everybody in schools also we make a benchmark that last time I scored 80%, now I target to achieve 85%. Similarly, your turnover, your profit, you should keep a benchmark. Last year I achieved a turnover of suppose 5 crores, so this year it should be at least 6 crores. Benchmarking is that. And based on the basis of your past experiences, you can learn from your past success and challenges, and you can try to not to repeat them. Okay, guys, I hope this session is not going boring. I'm trying to make it as simple as possible. There are three main financial statements which comes out after financial record status. Income statement. Income statement includes trading account, manufacturing account, where it gives you the details of your revenue, expenses, profit and loss. That is your operational performance, gives you an insight about your operational performance. Then comes the balance sheet. It gives you details about assets, liabilities, equities. What is the financial position on a very day to day? Though balance sheet is looked into by some people after completing the financial year, but it is very advisable to look the balance sheet on day to day business, because you can track the financial health of the organization, whether we are having profit, and if we are having profit, whether we are having cash or not. क्योंकि cash is a very key component, because cash, availability of cash affects most of your decisions, financial decisions. Then the term comes is cash flow statement, which I already told you, that there are some sources of cash inflows, there are sources of cash outflows. What are cash inflows? If you are a manufacturing unit, you make sales, that is your cash inflow. Cash inflow includes your there are three activities from which you can get your cash inflows and cash outflows. It is financing activity, operational activities, and investing activities. What is financial activities? Financial activity includes all everything's related to your capital, something that affects your capital. Like, you are going to invest in your business 10 lakh rupees, and 10 lakhs rupees will be in the form of your bank. You invested 10 lakh rupees in your bank, that is your capital, that is your financial decisions. You are taking loan of rupees 15 lakh, that is also related to your capital, your financing, you're financing your business. So also that also comes in your bank. So total 15 lakh rupees is your capital and financing in finance involved in your business. In, with the help of this, you can get to know your equity and debt ratio. Like, equity was 10 lakh rupees, means your own capital was 10 lakh rupees, and your loan was 15 lakh rupees. So 10 is to 15 is 2 is to 3. That is your debt equity ratio or equity debt ratio. So cash flows help you to take a proper decision making. Then there are cash outflows. So this was from investing, financing activity. Cash outflows from financing activities is withdrawing from your capital, making payment to the shareholders like dividend, making loan repayments. Then comes investing activities. What is investing activities? If you are invested in plant and machinery, then it is investing activity. If you are investing in FD, then that is also an investing activities. You are making investment in mutual fund shares, that is also investing activities. Then comes the operating activities. Operating is just your sale and purchase, how much you are selling and how much you're purchasing, what all operations you are doing in your business is called operational activities. You have to look into accounts receivables and account payables. What is account receivables? Well, how much amount you have to receive from the how much amount you have to receive from the debtors. And accounts payable is how much payment you need to make to the vendors. For general ledger, like, you maintain ledger of your every party in which you are dealing. It can be your creditors, debtors. So in day to day, you can know how much credit you have taken, how much purchases you have made from a particular creditor, how much payment has to be made, or how much sale you have made to us, how much sale you have made to a particular seller. Your Then bank statements. Your bank should be your bank accounts. The best thing is for banking you don't have to keep a record because the bank itself keeps the records. You have to just take out the records, maintain with your records. You have to reconcile means checking whether your bank transactions are reflecting in your own accounting or not. For that also accuracy is required. We have studied about budgets and forecasting, expense reporting, tax records. There is one term called depreciation schedule. What is depreciation? We know that an asset is purchased for a particular period of time. It is not for 1 year or 2 year. It might be for 15 years, 20 years. So we purchase the assets, but the expense is allocated in the is allocated with the help of depreciation. Suppose we are following a straight line method. Straight line method is followed. Then, if the asset is of rupees 20 lakh and it is available for 20 years, then every year you will charge depreciation of 1 lakh rupees. So, this itself says that recording is very important. What are the benefits of recording? Again, we have three basic benefits which help for the sustainability and success of the business. That is informed decision making, planning, strategic planning. What is strategic planning? Strategic planning making correct planning and forecasting and making budgets and taking decision on the basis of that. Then compliance with the regulation. Compliance with the regulation is all related to government policies, government regulations, government tax. Okay. Then we said it helps with the creditability and trust of the stakeholders. That are who are the stakeholders of the company. It can be creditors. Agar if you're not making regular payment to your creditors, they will not supply you raw materials. So stakeholders includes creditors, investors, customers. A customer, you are not able to serve your customers if you're not able to produce the goods on time. You're not able to serve to your customer, then they will not have a trust and they will not come back to you. So if you have records, you can have a study and take the trends, and you can analyze how to overcome your weaknesses and get more successful. है ना? Cost control, improve cash flows management, and facilitate in audits and due diligence. Tax planning and optimization, investor confidence, performance evaluation, legal protection, regular reconciliation. Now use accounting software. Here we come of using a proper accounting software and accurately. Invest in reliable accounting software to automate and streamline your financial process. Then implement internal controls. Like what are internal controls? Internal controls, there are some financial controls, there are some operational controls, and both can be your internal controls. Like financial controls, आपको दिख रहा है कि any employee is not working properly or he is not that effective according to the salary provided to him, or the performance he has done is not up to the mark, then you can take some internal action. Or if there is any loophole in the organization and your finished good is being stolen, or the person if it is stolen, then you can detect where the thing is going on with the help of the financial data. Like financial data, you saw that your sales is so much, your sales is 90 lakh, and your closing stock at the end of the year is 20 lakh. So it means that your sales should have been 1.5 cr if your stock is only 20 lakh, because you produce a good of 1.5 cr. So with the help of your financial records, you can know whether any loophole is being happening in the organization, any in any wrong activities are happening in your organization, whether the like if you keep a record of your attendance register, you get to know whether how much days employees is coming into an organization. You're keeping that record also, because on the basis of that you will provide salary, you will provide incentive, you will provide bonuses. So all these things include some expense. So maintaining record is very important. For that you should have a very proper accounting software on which you rely, which is available in the market. Then internal controls also, I told you, timely recording of transactions, consistent chart of accounts, maintain a consistent and well organized chart of accounts. A standardized system facilitates accurate characterization of transactions and simplifying reporting. There should not be ambiguity. There should be very clarity. There should be so much of clarity, like what kind of expenditure you are doing. Like suppose you are purchasing a mobile, so that mobile is your capital expenditure or your revenue expenditure, that needs to be known. So well organized and correct accounting should be done. Regular financial reviews, conduct regular reviews of financial records to identify discrepancies, outliers, and unusual trends. Like you saw a trend, like in every month the salary was 1 lakh, suppose, and in the month of November it went to 2 lakhs. Why? You should understand. So it might happen that you have employed more employers. It might be that you have made wrong entry. You have taken some other expenses into a wrong head. So all these things is helpful and available only on the basis of records. And on the basis of records, you check the trend. On those basis of trend, you forecast. And on the basis of forecasting, you take a proper decision making. Then employee training. If financial records are kept accurate, and it helps in employee training also. Document policies and procedures. Clearly document financial policies and procedures to create a standardized approach. Let's say your company is a 15 years old company. You might be having some kind of policy procedures, like if some goods are returned to you by your customers, whether you should entertain them, whether you should take it, what all document you should maintain when the goods is returned. So recording helps you to create a document also. So here you made a sale of 1 lakh rupees, and out of that sale, 80,000 rupees got returned. Goods return was 80,000. It takes a decision, like a person take, is taking your goods of 1 lakh rupees and it's returning back 80,000. He's only consuming 20,000 goods. So you will take a decision that this is not a good customer. है ना? So all decision making things has to be done on the basis of the records. I'm giving simple example in between so that you can relate with your businesses. So recording helps you to keep your documents proper. What all documents we have? We have when you purchase, we have purchase invoice. In purchase invoice, you see how much GST has been levied, how much discount has been received, and when you sell, you have sales invoice. So you see how much discount you have given or how much GST you have to pay. Okay, so these all documents are there. Then comes organizing receipts and invoices. Organizing receipts and invoices efficiently is crucial for streamlined financial management. A financial management word also comes into play. After keeping all your records proper, Financial management. What is financial management? It is a team of all people who take decision. It is a management to take financial decisions. So, suppose you are not keeping sales record, you are not making invoices. Suppose. So, in that case, if there is any debtor and debtor says, tell me how much amount I have to pay, but you have not made invoices, whether you will be able to tell him, whether you will be able to take financial decision, whether you will be able to streamline the financial management, no. So all these things, the basic thing is keeping proper records, keeping proper documentation, keeping in documentation you have to keep receipts also and your invoices also. There are two kind of structures. It can be a digital structure or a physical structure. Now that the market is becoming more active, so digital is more preferable, though you can keep a physical structure also. So digital structure, it might be digital structure or physical structure, both helps in taking the decisions. But in physical structure you have to maintain records manually, so it's better you have digital structure. Like you see a trend of a client, you see a trend of your customers, you see trend of your creditors, you see trend of your debtors. All these trends is happening with the help of your record keeping. If you suppose forgot to keep the record, then how will you take the financial decision? So this helps the organization to enhance overall efficiency, reduce the risk of errors. Uh, Suppose I made one sales and I made a sales on phone. I dispatched the stock. I did everything, but I forgot to record it. So there is an error. There is an error that is coming up. That error is your sales is showing less amount. So it, if your recording is up to date, today I made a sales, today I have collected the receipt, today I should make the entry in my books of accounts, so that all the risk is reduced. And then tracking, financial analysis, which we have already studied. देखिए, there is small, micro, medium, and large enterprises. How we get to know that this is a small enterprises, this is a micro enterprises, or a medium enterprises, or a large enterprises? After recording all your expenses, incomes, and sales purchases, you get to know which category you belong to. Digital tools for organization. What are digital tools? Digital tools like QuickBooks, Zero, uh, Tally is there. There is Fox Pro. There is Busy. There are many kind of software available in the market. You can approach a good vendor and take that software and keep your khata book is there. Keep all the records of your transactions. Now, tips for effective organization. Establish a consistent filing system, regularly update and review records, and implement robust backup measures for a foolproof organizational strategy. What all we were today discussing was only related to your records, but these records are very, very, very essential for taking proper decision of your organization. Now we can have one case study, but I'm not having the case study right now, so we can conclude what all is the, before concluding we can see what are the mistakes we can avoid. We, we can see that the business is properly reconciliation done of bank, properly following the taxation policies, not mixing the personal and the business finance. This is very important. Like today you purchased a mobile, Whether that mobile was your business expense or your personal expense, that needs to be identified. If you have purchased some clothes for yourself, it is very simple that that is your personal expense. So that personal expense should not be booked in your books of accounts. And the conclusion comes in this way. In conclusion, accurate financial records are cornerstone of a successful and compliant business. Implementing these best practices will not only streamline your financial process but also contribute to the success of your enterprise. And if your enterprise is successful, your district is successful, your district is successful, your state is successful, your state is kind of successful, then your entire country is successful. So your success defines the success of your country. So please keep your records accurate, and on the basis of that take proper decision making. Ma'am, Sonu ma'am, I end this session.
Yes, ma'am. So, ma'am, we have some questions. Uh, so, I have one question from one of my audience. What step I should take to ensure the accuracy of my financial records?
Basically, one should, for accurate financial record, one should be aware, one should be agile, one should be vigilant, one should know that we are incurring some kind of expense, or we are having some kind of financial transaction means finance means money is going out or money is coming in. Whenever that happens, or whenever other transaction like depreciation, where there is no cash outflow, it has to be taken. For that, you should either do it yourself, or it is suggestible that you should take the help of some accountant. And for better decision making, you can go for a chartered accountant as well. And proper accounting software should also be there.
Okay, ma'am. So we have another question also. What are the best tools or software for organizing financial records for a small startup?
Ma'am, there are many, you can search on Google that there are many software available, but basically what people use is Tally. But I'm not promoting Tally, but it is one of the software which has developed itself from last 15-20 years very smoothly. It has given all the features required for running a software very nicely, for taking better decision making, ratio analysis. So all these things, creditor analysis, moving analysis, break even point, everything is available on Tally. So I will suggest you, if you have still not gone for any software, you can go for Tally. But if your startup is not very big, you can go for you can go for some cheap or less expensive software. How do I determine which expenses are deductible for my startup? For that, it is not a one time answer. For that reason, I have to know what all expenses you are incurring. I can give you answer on the basis of the question that you should exclude this expense. I will give you one example. Example can be like, you have 2 3 options right now for running a vehicle. You can work on petrol, you can work on diesel, you can work on electric, you can work on battery. So whichever, according to your business organization, if you're running is within a locality or within a small place, you can go for battery operated vehicle, so that the expenses will be down. But if you are doing long runs, so diesel will be preferable. So it is not like which expense should be reduced, or it depends on the kind of business you are doing. I hope you got the answer, Mr. Yadav ji. Definitely, digital books should be preferred because you can take immediate decisions. Next question.
Digital books or physical accounts books? What to prefer?
I answered this question. I will say digital platforms should be preferred because
Okay.
the world is going digitalization. So keep some of precaution that the digital data is not leaked by the employees. Apart from that, keep passwords, keep two-factor authorization, authentication, give particular person the authorization to access the records. But digitalization should be done.
Okay, ma'am. Okay, ma'am. So, no question here right now. So, thank you so much for giving your precious time for us. So, thank you on the behalf of Smart City and Spark Incubation Center, ma'am. Thank you so much.
I was delighted and I was privileged to have this session with all of you. I hope we take all better sessions and on better topics and hope for your beautiful and successful future. I hope you keep your all your records perfect and whenever there is any kind of suggestion required from myself, I'm always available for you.
Okay, ma'am. Thank you, ma'am.